On behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in sunny and scorching hot Scottsdale,
It's not
Arizona.
scorching, you bonehead. It's 72 degrees.
Sounds very nice. Sounds refreshing, actually.
Yes.
Well, I tell you what isn't refreshing is the stock market. We are all over the place these days, and we have the right guy to talk to us about it because we saw a sector that actually got pummeled in the month of April, and we're going to break it all down for you. We have Rob Thummel. He is the managing director and senior portfolio manager at Tortoise Capital in Kansas City. Rob, welcome to Buy, Hold, Sell.
Hey, thanks for having me, Todd. Nice to meet you, and nice to meet you, Toby, as well.
Cheers.
Absolutely.
Now,
Absolutely.
I'm the energy expert here, so don't let Todd say anything, okay?
That's
All
right.
right.
Well, I got to say, you know what? We had to break down a certain sector because all we're hearing about are tariffs and the economy and everything else. We saw the GDP number come out and we're seeing the contraction. It's just bad news all around. But when you start really dissecting certain sectors, it doesn't get any better. The energy sector right now for the month of April, West Texas Intermediate down 18%. Brent was down 15%. These are the biggest falls since November of 2021. Rob, when is this bleeding going to stop for the energy sector?
Well, that's a good question, Todd. But what I would say is, well, hey, when you look at the energy sector, yeah, you're right. It's been a rough month, but it's been a great 5 years, especially for energy infrastructure. You look back at the last 5 years, 34% annualized return through the end of March on an annual basis, compared 19% for the S&P 500. So the one thing that is certain in these uncertain times are dividends, and dividend-paying stocks like energy infrastructure stocks pay are a good place for investors to hide out while we got to ride through this uncertainty, and the economy really recovers, and we get back to more normalized economic growth.
Hey, Rob, the oil price thing, don't get me started on, this, oil prices are down 25% because I'm the president thing. But Iran has now, finally, they're again on the sort of the outs, and much of their oil is now not being able to be exported, blah, blah, blah. But oil prices have come down because Saudi Arabia, OPEC, everybody else turn on the taps. Where's the floor when I am told, based on my old energy experience, that like $65 is the break even for Permian? And where is the break even? And where do they start shutting down, these holes?
Yeah, no, you're right. We're right in the midst, right, as you know, Toby, of earnings season right now. So we're getting a little bit of information, as we speak. But I think what we've heard is kind of the cash flow break even, because of the discipline that these oil and gas producers have displayed lately, is probably somewhere between 60 and 65. So you're right on. And so we'll probably continue to, if we stay in the 60 to 65 range, US, WTI, you'll probably see kind of flattish type of oil production growth. If we go below 60 and approach and get oil prices into the 50s, I think you're going to see a lot of these producers start to consider us slowing production growth and maybe even halting, and maybe even, we might have a little bit of a production decline if we get closer to $50 a barrel oil prices than where we are today.
Well, a lot of investors don't know that, particularly the Permian, the biggest field in our areas, that there's a lot of natural gas that comes out of the ground when you pull this stuff out, right? So if they, when they do shut down, or when you start to see wells being tapped, or they just, not plugged, but they close them off.
Yep.
Then we go long natural gas, particularly if we're getting into the wintertime. Because that really makes, at the margin or on the margins, depending on what economic school you went to, natural gas prices can get just slaughtered, or they can get, rise. As you know, you've been in business a long time. Where do you see natural gas in this whole play?
Yeah, well, so I tell you what, so Tortoise, what we see is the energy sector really being redefined, and it's going to be led by natural gas going forward. If you think about how important natural gas is, you've highlighted several of the reasons. Traditionally, it's known for heating, and it's used a lot for heating, and that's great. But if you look at what's going on with AI and the development of AI, we're going to need a lot more electricity here in the U.S., and that's going to be generated. That electricity is going to be generated using natural gas. Natural gas is already the largest fuel supply source to generate electricity in the U.S., and it probably is just going to continue to grow. And oh, by the way, exports of liquefied natural gas to all around the world, right? U.S. shale really changed the game for the U.S., turned us into the largest oil and gas producer in the world, the largest energy exporter in the world. And so we've got a lot of excess liquefied natural gas that we're shipping all over the world right now. And we frankly see the LNG export demand doubling actually between now and 2030. And so that will be another significant source of demand for natural gas. So we're really big fans here at Tortoise of natural gas.
So how do you play? So we also talked a little bit before the show about LPG, in other words, liquefied propane, which is we happen to own the shippers for a long time until prices fell out of the sack. I guess that's a polite way to say it. What do you see for liquefied propane, which is India and China and Japan? There's no supply chain without LPG to China, for instance.
No, that's right. No, you're right. So yeah, ethane and propane are really important components, the kind of building blocks for petrochemicals. Petrochemicals are used to generate a lot of consumer products. And but as you know, the economy and LPG demand really are tied hand in hand, even more closely. So if we have an economic slowdown, that's probably going to be a decrease in the demand for LPGs. However, ethane and propane being exported to the US, to China, to India, are some of the lowest costs feedstocks that you can find, right? So we're going to watch this pretty closely. Right now, all indications are, and has been reported over the last couple of days, that actually ethane and propane being exported from the U.S. into China might not be subject to tariffs in China. That would be a positive. And we'll continue to have those volumes flowing.
No, why is that though?
It's Todd. It's simply because they need them. They don't really have a lot of other choices.
Yeah.
So if the Chinese are going to continue to produce a massive amount of consumer products that are exported, they need low fuel costs. They need low supply costs to really be the base material to produce these consumer products. And U.S. ethane and U.S. LPGs are the best options. They simply don't have a very good replacement from a cost perspective.
Yeah, Todd, remember that movie long ago when the guy says plastics?
Oh yeah.
It's plastics, you bonehead. How do you make plastic?
I do know what you're talking about.
Yeah. And so that would be interesting. We do have some leverage there.
Yeah.
And it would, it'd be interesting to see. I know, you've been following obviously the LPG for a long time and liquefied natural gas, but in that Corpus Christi area now, there's more space coming on, right? For LNG. And how's that progressing?
Oh, it's progressing well. So what we would expect is that you're going to see LNG exports double in capacity from where we are today, and we're already the world's largest LNG exporter in the world today, Toby. That's going to continue. We're going to actually expand that even more. So yeah, it continues to progress. A lot of some people say, oh well, we're going to have steel tariffs, and then will that impact the development of some of these LNG export facilities? So far, we haven't really seen that had an impact. A lot of the new facilities probably already have procured their steel in advance, and so we don't see that having a huge impact yet. So as far as construction of new LNG export facilities, everything's continues to be a go and going forward, and I think that's a good thing really for the U.S. industry.
And in your infrastructure fund, tell me some of the names that you like the best in that fund.
Yeah, so we have a kind of a pure play energy infrastructure fund called the Tortoise North American Pipeline Fund that benefits from the U.S. being the largest producer of oil and gas in the world and the largest exporter in the world. So if you look at some of the names that are the top of the list, it's names like TC Pipeline, Williams. Those two companies are really natural gas focused energy infrastructure companies. They own hundreds of thousands of miles or tens of thousands of miles of pipelines. Sure. Economic moats are wide, enormous for these companies. You can't replicate, you can't rebuild these pipeline networks that they operate. Names that you might be a little familiar with as well. Energy Transfer is one of our largest holdings. It's a 7.5% dividend dividend, and is going to grow the dividend 3 to 5% a year. An outstanding company when you're looking for high yield company, or a company that let me rephrase that. It's an investment grade rated company. It pays you a high yield as an equity holder with growth. And so yeah, it's companies like that, the energy infrastructure companies that are really contributing to the U.S. becoming a larger and larger exporter of all energy products, oil, natural gas, ethane and propane that you highlighted, gasoline, diesel, jet fuel, really on all of the above.
Hey, so a data center that we're working with in the development has the problem that the data center location's in Midland, but it's outside Midland, and it's sort of not on the main drag. They're looking at using Bloom Energy power development because they have enough natural gas for it, and they don't want to wait 3 years to get a power or 4 years to get a power plant built. Have you looked at Bloom Energy in that regard?
Yeah, well, that's a Bloom is kind of another alternative source of energy. At Tortoise, we do look at all forms of energy. We look at all forms of technology. Bloom's one we've looked at in the past. It has some potential as well to be a source of energy supply. Look, we're going to need a lot more energy in the U.S. over the next couple decades, probably, whether it's for advanced manufacturing, whether it's for AI development, whether it's for all of the above. So we're going to need a lot of additional energy, and we're going to need all forms of energy, frankly, to meet that growing demand.
So how about those small nuclear reactors?
Yeah, so those are a little bit different. So we look at those and we follow them very closely. I think what's important for people to understand is small modular nuclear reactors. Right now, there are 0 of them operating in the U.S. It's a different technology. It's a new technology. I won't bore your viewers with the details, but it's a different cooling technology that requires a lot more research, a lot more development before they become commercialized. So they're going to have to go through an extensive process of being approved by the Nuclear Regulatory Commission. They're going to have to do a lot of testing. But it potentially it could work, and they could work, but we're years away, if not over a decade away from small modular nuclear reactors really providing meaningful energy to the U.S. energy grid.
True.
So on the energy sector, because it's obvious it's a sector in transition, especially as we move further into electric vehicles and maybe one day we'll see planes as well as buses and all that. Well, we do see buses now. But the point being is that where do you see from a legacy standpoint with oil? Do you think that oil, where you look at the big 3 oil companies with Exxon, Chevron, and Conoco, do you see these companies maybe just evaporating over the course of this century, or will there always be a need for oil?
No, Todd, I think what a lot of people don't really understand now is globally, oil is still the largest energy supply source globally. Now, it's not in the U.S., but globally it is. Now, the way we like I mentioned earlier, we still see the energy sector being redefined. Natural gas, we think, will become play a more important role going forward. But oil is always going to have a role. It's going to have a role for a long, long time from our perspective. Growth is going to slow, and demand will probably flatten out over time. But oil will still continue to have a role. And if you look at what you look at what Exxon and Chevron and Conoco are doing, as you highlighted, they've become some of the bigger producers in the Permian Basin that Toby talked about previously. And you look at some of the things that Exxon's doing. It's producing oil as well as its primary product. But it's also doing a lot of things in carbon capture. It's doing a lot of things in advanced recycling. It's doing a lot of it's started to look at data centers. Oh, by the way, it's trying to mine for lithium in this place in northern Arkansas that they call the Smackover. I mean, it's doing a lot of different things as well.
Yeah, they've diversified for all the obvious reasons that you stated. How about hydrogen? We're talking about Bloom Energy. That natural gas creates the hydrogen that then creates the power. What's your hydrogen stance?
Yeah, so hydrogen's another one of these technologies like small modular nuclear reactors, probably a little more advanced in terms of its in terms of the development, but there's still a lot of R&D going on with hydrogen to try to make it economic relative to natural gas. Look, at the end of the day, these new technologies have to be economic relative to natural gas, and that's really hard to do right now. Natural gas is such a strong, powerful, energy intensive fuel that's low cost, low carbon. It's really hard to compete with it. But once again, longer term, over a much longer period of time, we're going to need all forms of energy, including hydrogen, including carbon capture, and including small modular nuclear reactors in the long term.
Okay, guys. Well, we're going to leave it on that block right now, because coming up after the break, we are going to ask Rob about some individual equities in the sector. We touched on them a little bit, but we're going to really deep dive in the next block. So we do hope you stay with us. And
I'm still short oil, Rob. Okay, so it takes two sides of the trade.
There you go. I love that. We got the bull and bear argument there. So with us today is Rob Thummel. He is the Managing Director and Senior Portfolio Manager at Tortoise Capital in Kansas City. Rob, I'm assuming you're a Kansas City Chiefs fan?
Oh, well, of course, you have to be, right?
Right.
Well, Toby loves Mahomes, that's for sure.
Oh, that's good.
But we'll talk about that a little bit later on. I'll take care. So please stay with us. We'll be right back after the break.
Buy, hold, sell, brought to you by CrossCheck Management.
Welcome back to Buy, Hold, Sell. Well, with us today is Rob Thummel. He is the Managing Director and Senior Portfolio Manager at Tortoise Capital in Kansas City. And Rob, when we left off in the last break, we did tease it where we're going to be talking about some equities. I have to ask you, what's your favorite in the energy sector these days?
Yeah,
favorites, not just favorites, favorites.
Plural. Okay. No, one of my favorites is one of our favorites here at Tortoise is Cheniere Energy, LNG. That's the ticker. It's because it's a pure play liquefied natural gas export play, and we talked extensively, over in the last segment about the significance of growth, and there's just the significance of LNG. But the thing about the Cheniere Energy team is it's really been an outstandingly run company, and what I mean by that is they generate a lot of free cash flow, and not just for a year or two, but for several decades. And so I just don't think that the market is appropriately valuing the duration of that free cash flow, and really, quite honestly, the quantity of that free cash flow. So we're really excited about that name in particular.
And it doesn't matter about what the price of LNG is, because they're delivering it. That's where their cash flow comes from.
That's exactly
I know they
right.
also have natural gas fields, but most of their natural gas they're buying from someone else or transporting for someone else, right?
They're just charging a fee, Toby. That's the thing, and you highlighted it. The quality of the cash flows coming out of Cheniere and the quality of that free cash flow. That's the other thing I should be mentioning is that's really high quality cash flow, big economic moat, high quality cash flows, and long duration high quality cash flows. It's just hard to find those type of companies in the stock market.
Well, I mean, so Russian natural gas is cut off to EU, so that's obviously a big thing. If, for heaven's sake, perhaps that the war ends, what do you think about? Are we still going to be boycotting Russian natural gas?
Well, I mean, you got to restart, natural gas flows out of Russia to Europe. You got to repair a pipeline. That's going to take a while. But first of all, you got to agree that you want to even consider that, right? Germany, and EU. I think it's going to be tough these days. I think economic security became really important for Europe and really countries around the entire world. And so I do think as a result of that, no, I don't think that Russian natural gas is going to probably flow to Europe anytime soon. Even if there was, a peace agreement or
Sure.
ultimately someday when the war ends. I just think the U.S. can provide the energy security. We have plenty of natural gas, and we can export it to not only just to Europe, but to Asia, to South America, and whoever else wants to buy it as well.
Yeah, no question. The power outage in Portugal and Spain a couple days ago, the first thing they said was it was not a cybersecurity issue. Well, then I have 4 emails here from people who work in the power industry who says, oh yeah, it was a cybersecurity issue. I mean, this is a little off the chart, but really, cybersecurity for power is going to be as important as infrastructure. That particularly since we have a tariff war, and the most amount of hackers in the world are North Korea, China, etc. Do you ever think outside the box a little bit?
Oh yeah, no, Toby. I think that's a good observation. I think these electric utilities in the U.S. have done a pretty good job of recognizing that as a risk for a while. And I've done a lot of things to improve their security. Whether that's having their operations off the internet effectively. Kind of a closed loop. So it's difficult. It's almost impossible to gain access to and tap into their to their operations. A lot of them have done that. We've got these regional power grids in the U.S. that can really, help us avoid these major rolling, or not necessarily rolling blackouts, but just absolute blackouts that really happened in Spain. We've got a much more sophisticated power system, I think. And so I think that, always a risk, but I do think that the power companies, electric generation companies, have done a pretty good job of trying to limit and minimize the potential of that risk.
Yeah.
And we'll continue to.
Yeah. Ex California, of course.
Hey, Rob. So one thing that in the energy sector, there's always the discussion about dividends, and
Yeah.
Toby's a genius at finding these investments that pay great dividends for his clients. Are there any companies though in the sector that you think may have a challenge in continuing to pay out a dividend? Or are there any that are cash challenged, I would say, or that you would see in the near future?
Well, I'll tell you this, Todd. This is. So I've been investing in the energy sector 30 years, 20 years at Tortoise. We saw a big change in 2020 in the way that these energy companies focused on cash flow. And what I mean by that is they all became capital disciplined. And you say, well, what does that mean? Well, what that means is they stopped spending so much money on CapEx, on capital expenditures. So that freed up a whole bunch of excess cash flow, a bunch of free cash flow. What did they do with that initially? They paid down their debt. So now they have less interest. So now their dividends aren't as much of a risk. Now, so now today they have lower capital, better balance sheets, still continued pretty good free cash flow. So a lot of these dividends we think are in pretty good shape. Where the dividends could be at risk that you want to look at are some of these oil and gas producing companies that pay variable dividends, where that variable dividend is based on the commodity price. And as we just talked about, oil prices are down a lot. You mentioned it earlier, Todd. And so some of the variable paid dividends that some of the oil and gas producers pay might be at risk. But in energy infrastructure, I can't emphasize as much. Those are steady, consistent dividends, and they are certain, like I said, in these uncertain times.
Yeah, and you like Williams, you like TC, you like ET. Any other names on that hot list?
Well, on the MPLX is another one. It's another big dividend payer, but it's going to continue to pay a really solid dividend as well. So that you can add that to the list. Targa Resources is another good one as well. So all of those are pretty good dividend payers, or really good dividend players, frankly, relative to the S&P 500.
Boy, I miss the days when the oil and natural gas energy trusts were rocking and rolling. And we're paying out, 40% dividends, 5% a month. I mean, that was fun.
Absolutely. No doubt about that. Hey, Rob, one last question before we end the show. So, as you know, there are extremely generous tax benefits to those that are exploring for crude and I'd imagine natural gas as well. So with that, do you see a flood right now of additional companies or additional or maybe startups that are trying to get into the exploration business?
Yeah, not really, Todd. No, that's a good question. So I think what you would say is what you've seen is actually a consolidation.
Yeah, it's the reverse.
Over the last several years, all those companies from 2020, really 2022, a lot of distress in the industry. But what happened is the industry consolidated and the debt levels came down, and so now you've got a larger amount of the production is produced by a smaller amount of producers. But it's Exxon, it's Chevron, it's Occidental, it's Conoco, it's really big names, Diamondback, things like those names. And so the answer to your question is we've seen capital discipline, lower capital spending, continued production growth. And we continue to expect to see kind of steady production growth unless we see oil prices fall here closer to $50. We'll continue to, beside that, we'll continue to see steady production growth out of the U.S. The U.S. is going to continue to be the largest oil and gas producer in the world, continue to be the largest energy exporter in the world. And that's a good thing for energy investors.
I mean, especially when we take over Canada. So anyway, Rob, final question. When I look into space, I don't see a lot of share buybacks, but am I missing something? Do you have some companies there that are being aggressive in buying back shares?
Well, Cheniere Energy actually bought back a significant amount of shares, and so that they are one that bought back a significant amount of shares. Williams.
Well, when it used to be $2, yeah, that was a pretty good.
That's right. That's right. That's right. You're starting to see a little bit of share buybacks. The companies could always pivot and they're spending a little growth capital. They could always pivot if share prices got a little weaker, and you could see significant share buybacks from these companies because they're, as you know, Exxon, Chevron, they've got significant buyback programs, right? They're buying back a significant amount of their stock as well, and so we would expect. Going forward, if we see some weakness in the economy, continued weakness in the stock market, the share buyback programs in the energy company and in the energy sector will lift, and it'll probably accelerate, and there'll be more of that, Toby.
Yeah, and they're not issuing now. So
right.
So in the old days it was, oh gosh, we have a new field. Okay, let's sell another 50 million shares, dollars worth of stock and dilute ourselves, but we'll make it up in volume, right?
Yeah.
And then the more guys drilled, the lower the price went. The economics still, has gravity. But yeah, it's good about Cheniere. They've been around a long time. I've followed that story for 30 years, I think.
Yep.
And there was 3 or 4 times where I thought they were, out of business.
Yep.
And so the fact that they got through and finally got, that business going, I am very proud of those people.
Yeah. No, they've done. Jack Fusco and the team have done a phenomenal job over there of turning that into to really the largest exporter of LNG in the U.S. and one of the largest in the world, and it basically started it was nothing, and it's become a really significant and really important company.
Yeah. Hey, do you guys own the LNG shippers at all?
We don't, those are a little more volatile for us as far as the cash flows are concerned. So there's and some of those have kind of consolidated away. So no, the answer to your question, short answer is no, we don't, Toby.
Okay.
All right. Well, we're going to leave it there, guys. So Rob, thank you so much for joining us today. We definitely got to have you back, especially.
And we have a standing bet, Rob, that the next time you're on, the oil prices are going to be lower than they are today. Okay, I'm just saying.
Fair bet.
Much lower.
Fair bet.
All right.
And we welcome everyone to check out Rob Thummel and the rest of the team there and everything that they have to offer with their ETF at the tortoisecapital.com. Check it out. We'll also have a link in the description for you as well. So, Rob, this was great. We definitely will have you back, and we definitely want to thank you for joining us today. And on another note, on a side note, best of luck to the Lemoyne College men's lacrosse team. They are the #1 seed in their conference tournament this weekend, and I definitely wish them all the luck in the world.
Yeah, you'll notice if you look on the back of the jerseys, there's 2 kids whose name starts in S and ends in Burger, and it goes across their entire shoulders.
There you go. Absolutely. So on behalf of Rob Thummel and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by CrossCheck Management.
I want you to smash that like button.